welcome to yet another episode of Weekend with Indiacharts. I'm Chavan, the business head of Indiacharts, and along with me, the founder himself, Mr. Rohit. Rohit, welcome to the Weekend with Indiacharts, episode number 2.
Hi, good morning, and great to be doing one more session at a very, very critical time, I think, in markets where we are trying to decipher, whether we are going through the rollover process from up to down, or is this just going to keep continuing the way it has? So I think it's a very tough question, making it slightly difficult for everybody in the short term because the easy phase is over and a lot of analysis paralysis going on. I think that will continue for a while till we get final clarity on the trade setup. But you'll just have to keep your options open and maybe just wait for further confirmation. This time I think we have the trade setup just like after every correction that we've seen over the last year. We have the same trade setup, just that this time we want to be a little more careful and a little more sure that it's going to keep working the way it has for the last 12 months.
The last time when we met in the first episode, you were sounding bearish, and till Thursday it worked out really well. But Friday, the positive closing on the Nifty, it held on to the 20-week average. It held on to the channel support. Even the US markets, Dow Jones 400 plus. So do you think the C wave will play out, or is it like you have to change your counts now? How do you take it from here?
So it has been a tough question last 2 days. Friday, I think Thursday I did think we'll bounce back. Also note Thursday was expiration, so probably a lot of the excessive longs that were behind the March correction got get unwound into that expiration, right? So there was a lot of call buying, and so that shows up as call writing. And we had a record amount of call selling through this month, and all of that is done. So have we really capitulated the long side of the trades, and are we ready to then rally again? That's the simple question. And Friday was the first bump up post expiration that we saw, and it came from a very important level. So that is why this question arises. It's possible to mark the entire fall as WX, YX, Z and say that it's done. There was some confusion in my head on whether I mark it as Z or should I mark it only as A of Z and then B and C is pending. So that's what the question you're asking. And we being at such an important level, the odds of being wrong on that are high. But what might still happen, which is the risk which I'm trying to mitigate here, is not about the short-term wave C down happening, but whether if this bounce even extends, is it still a bounce, or is it start of something? I think that's the big question. So let's try and just look at some of the observations before we'll look at the big picture, and then we look at the short-term setup once again, which we've already sort of discussed. So a couple of things which I highlighted during the week. An intermarket divergence between the Nasdaq and S&P. Now, why is that important? I'm showing you a previous top which occurred in September of 2018. Here too, what you see is the new highs that were continued to be made in the S&P index were not confirmed by the Nasdaq over a 1 month period. And then that got followed by a meaningful subsequent decline. But simultaneously, I can show you an intermarket divergence which occurred just prior to that, which did not really work out. But many of them do. Now here you have another one. So let me now further pull in data onto the screen. And when the new high is here in the Nasdaq, not confirmed by the S&P, what you got is an eventual continuation of the corrective phase. This ended up being a much more significant corrective phase. This one meaningful in terms of percentage, and this one very small, nothing meaningful. So you have 2-3 things, and you mix it up with then also your momentum, right? So we'll go and look at what the weekly momentum setup is. But the first thing to observe was that over a 1 month period, we are not yet getting new highs in the Nasdaq compared to the S&P. Okay, and while that is happening, we can also see a possible 5-wave decline in the Nasdaq. So I've marked this as 1, 2, 3, 4, and 5. So if I do that, I can say this is wave A, and we only bounced back in wave B, which I've marked at this high because this part is corrective in nature, and possibly did minor wave 1 and 2 last night. So if I go with this count, then another Nasdaq sell-off in wave 3 down is coming, unless I say that no, B is going to continue to a higher level. But that's not really required or necessary because we've already done 61% retracement in wave B, so that's sort of complete. So all the S&P might be doing then right now, either this is a 1 and a 2 somehow, so this may be an expanded flat, which is what EWI is saying. So Elliott Wave International's view overnight is that this is probably 1 and 2. But the only thing is they've been doing that at every high and low, so we can get to an endless debate on that. It's also possible that this is an ending pattern developing, something like this. So it may just touch this top end and then come back. Okay. So I think we cannot conclude just based on the overnight move in the S&P that something has changed. In fact, talking to you, I just remembered there was something which we look at, that's the VIX, right? So I'm just going to go to the US VIX. Okay, so let's just look at that for a moment. And the VIX is actually, down to significant low level. Okay. Here. So this reading of at around 18. Okay, so now you're looking at this. This is the pandemic runoff. And when that happened, there was a big gap left behind. So a lot of people have been watching this gap relentlessly because this gap, getting filled or not getting filled because it was left behind is actually acting as a support level. Okay, so a lot of the sell-offs over the last year have actually occurred from this zone. It touched this, then you got a market correction. Again, it touched it here. You had several market pullbacks. And so once again, you're right into this zone. I think a few points lower and the gap will be filled. So the entire rally this year has actually occurred on a higher volatility reading, and where we would think, 18 is probably the bottom end of the range. So closer to the bottom end of this range as far as volatility also is concerned. And so that doesn't leave us with, a lot of room in terms of movement. The next thing which we are discussing is looking at the weekly momentum. Okay, so when we look at the weekly momentum, what we see is a clear negative divergence occurring. In fact, I'm more taken up by the same kind of setup on, say, the Nasdaq. So let me just go to the weekly momentum on the Nasdaq, where in both cases where you haven't broken the 20-week average, but the Nasdaq is struggling and trying to do so. And usually after a very sharp rally like the one we've seen last year, when you get a negative divergence like this, I would expect prices will at least pull back to the weekly bands, to the lower end, which is the 2 standard deviation lower Bollinger Band. And that's where that ABC setup also fits. So this further correction in C down for Nasdaq before even it picks up again is what I think the momentum cycle on weekly charts is showing. So this remains an active risk, which I cannot really rule out right now. And therefore, last night's overnight move is not sufficient indication. I think the only problem we face, so with that I'll come to where we are on the Nifty itself. Okay, so the problem I face, and I should even in fact look at the intraday chart, which I discuss every day, is whether to mark this as X and then Z as complete. See, this is what I've been debating, and it did initially look like that. I mean, I could say this is A, B, and C done because after all, this ABC was big. This one was faster, where the B did not show up on the daily chart for the Nifty, and this is very fast. So in terms of speed, slower, faster, fastest, sort of done, except for this one red candle, green red candle you see over here, which looks corrective. So because of that, and I thought maybe if I take this as 1, 2, 3, 4, 5, which I was trying to do on the Bank Nifty. So then if I did that and marked A at the second red candle along with where the Bank Nifty made its fifth wave down for the entire fall, then I could actually take this as wave B. But if I do a full 5 wave and wave B, then for Bank Nifty, it should mean a bigger retracement after all. So if I do a comparison with Nifty and Bank Nifty, if we are really saying that this whole fall is A, okay, then wave B cannot stop here. It has to be a 50 to 60% retracement of this entire 5 wave fall. So that means Bank Nifty should go back to 34,500 or even 35,000 almost. That's what I discussed on Thursday. But on Friday, I thought, well, since the bounce was ending near retracement of this last leg, should I still consider it as an ABC, XABC structure? I think that's where I was stuck. So if it opens higher than these levels on Tuesday, which is just the current indication, I mean, you don't know what will happen to the US on Monday, and suddenly your perspective will change. I'll not take a view just based on SGX, okay? Because this retracement is around 50% in the Nifty and 61% in Bank Nifty. So it was very well within the idea of this being A and being B. Okay, but if these retracements are defied, then we have to think that Z is done, and maybe we are doing a larger retracement of this entire structure. So then you think of retracement of the whole, and when you do retracement of the whole, it opens up the possibility that you go to 15,000 and then come down again. Okay, not necessary that you're going to new highs. Okay, so this is and the whole reason behind this discussion is what we discussed also last week when we look at the daily chart of Nifty. This channel, which has held, I think, for this entire move, and even on Friday we haven't broken it conclusively. This entire movement in the Nifty has actually occurred inside this channel, right? So if I draw it more exactly, it's actually not broken as it may appear on this chart. It's sort of almost touched the low, okay? And so we are at the bottom end. The problem is that for the first time I can count 5 waves inside this channel, okay? And so this is classic Elliott wave, where if you can count 5 waves inside the channel, then is that pattern complete, and are we slowly rolling over from a top to a bottom? So apart from short-term bounces and retracements that you can get, because like this ABC got retraced 80%, okay, so and then this again, if this is complete, if something is complete here, are we going to do a larger retracement of this before it goes down? In fact, I marked X over here. Is it also possible that this is part of X only, A, B, and then this is C, and then you'll get your X wave, and then you'll actually start down? So these are different possibilities which we still cannot rule out completely. Okay, and to show you a highlight of a 5 wave, so 5 wave in a channel, we could very well go to the start of the 2002 bull market. This entire bull run was perfectly channelized. So the sharpest part of the correction did not come at the time this break. So this was a very zigzaggy period, painful to trade. ABC, then bounce back, then this is A, B, and C. So it's a 335. Then again it's A, B, and C down. Then again it went back up in another 3 wave, formed a triangular pattern at the top. And then you got this large sell-off, which then again also had the event of the election, where the BJP government shifted towards the Congress government, and you had this big sell-off. But this took around 4 to 5 months to complete. So we don't know now if we are completing 5 waves, how much time it's going to take. And we are at the edge of trying to break this channel or not break this channel. Now you can argue, no, we are not here. You're probably only here, and this has not been reached. So that's, I think, the argument we can make. One thing in support of the move is, of course, I put out the put call ratio yesterday, which is the monthly, and then you have the 20-week average. The 20-week average held here, it held here, and so we are right there here. So as we saw in the S&P, these levels have held. Nasdaq also 20-week has held. Will we hold this up and end up making one more new high? Will this continue in terms of trend like it did from September? It just continued. So till a few weeks back, I think I had this view that I can mark this as 1 2 1 2, or I can mark this as 1 2 3 4, and that view is now in question. So if we end up holding the 20-week average, are we going to then start the fifth wave up and go all the way to 18,000-19,000? It's not a wrong view. Okay, it's right now we haven't either broken the channel or the 20-week average or anything to say that it's over. It's just that because we have 5 waves inside a channel, you want to be sure that something else is, that this is not the end. So waiting for that clarity, I think, is what I'm really doing right now. There are a lot of indications why a correction can occur, like I said, based on US markets, looking at the Nasdaq, why it can go lower, looking at maybe weekly momentum in our case. does not have the same type of negative divergence between the September and January highs, but there was a negative divergence between the Feb and March highs, right? So, or rather Jan and Feb highs, these two. So that smaller divergence was there, which is played out. We don't have a larger one to really say that, this is it. So yeah, I think these are all the combination of observations. And unfortunately, I've given you both bullish and bearish observations, which means I'm having to keep my mind open right now on both sides of the curve, which is if it starts developing impulsively on the way up, if a lot of sector charts start showing that no, this fall is done and we are starting up, then that's the view we'll have to take. But while that evidence is not yet clear, for once, I would want to just hold back a bit and be a little cautious. I think that's my conclusion. Yeah, I've just ended up explaining both opinions that you can end up with a situation where we mark this as 1, 2, 3, 4, and it ends up being a bullish scenario, and we can take this as 5 and then think that it's done. I think those are the two. That's the fight we are having right now, without any conclusion. And so, just because it can be marked as 5, I'm still being cautious. I think I cannot see the clear ABC completion here, like we could see here very clear C5 complete. Okay. Here, of course, it was more complex, but I could say WXY, and it was very early stages. So we had a lot of short position, Nifty futures and discount, a lot of sentiment indicators telling me that this cannot be the top. It has to be a bottom. Here we don't have the same scenario. We have some oversold readings, but can I mark this as a clear A, B, C? It's way complex. So I would have to mark it as WXY or something like that. And in that, when I do a WXY, what I have to really rule out is that we are still not doing an X, or whether this was not an X, or X is still going on. And because I'm not able to rule that out, I'm not able to say that this is it, and we're ready for takeoff, or rather we just do an X and then we end up breaking this. And if we do end up breaking this, then it's the whole scenario changes for many months. But then everything will be corrective. Even after this fall, we may get a rally, but it will again be corrective. So I think this time I need to wait for more evidence.
Yeah. So I was going through the comments of some of the subscribers. How do they take the investments, especially the investors? How do they play out in this markets? They were extremely worried on some of the value-based stocks like Coperan and Indian hotels. And I was seeing a lot of comments, especially on the value-based stocks.
So first thing, I have to be careful about saying that, see, we are not giving advice. So when we are posting those stocks, they are ideas that are of long-term interest to me, where I may have found something interesting. And then what we do is we really show the setup on an ongoing basis. Now, as and when the setup is good, I write about it. As and when the setup is not, I avoid it. Now, between writing and avoiding, there are periods where there's risk management that has to be done, which is something I think everybody needs to learn to do. But it is at 2 degrees. One is if you have made an entry at the right point in something, okay, and you're holding on, then and if it's gone up, say 50%, 100%, then there's very little risk management on a long-term idea. See, we're not talking about trading. Okay, so right now let's just talk about the investment side. So say this is a bull run. I made investments over here, I made investments over here, and continuously as I'm trading, if I make some trading profits, I keep adding it back into my investments. That's something that even I do. But that means I'm investing at every stage in the market. I'm even investing here in January and February. The problem with that is now there may be some stocks which are up a lot. Like say, for example, if you say Coperan, it is up from say 30s to 30, 35, 40. All those levels we've looked at it as an investment, and the stock is now had gone all the way to 120 or 130, or now it may be just trading in that range, may come down to 100. Will that really bother me? Will I get out of it because it's going to fall back to 90 or something? The answer is no, because 1, your purchase price is way lower. 2, you took a long-term view, which is multi-year in nature. And no way can you make a 5-year investment if you're going to get out on every 30-40% decline along the way. And once you're deeply in the money, unlike options. Okay, so in options you're worried about time. The best thing about investing is there's no time value. You're not going to lose time value if you hold on to a stock, right? So if there's no time value loss, now someone might come and argue, no, but then fixed deposit may give me more return. If something has gone up 100% in 1 year, it's paid for the fixed deposit for the next 3 years, right? So why would I compare it with a fixed deposit for the next 3-4 years? And so if I have that much time on my hand, I might as well wait, unless I think the story's gone wrong, or it's completed 5 years on a monthly or quarterly degree, because that's the investment time horizon. So like someone was consistently asking recently Biocon, or someone was asking about many different, I think there have been many posts on different stocks. Now Biocon, we wrote about the trade setup in 2013, and it's been in the value of investment for 8 years. It's been through all these bull and bear phases, and it's still gone up in trend. So if I just open the chart of Biocon to give an example.
The problem what is happening is, as and then you give an update, they take it as the investments from there, at that range.
Take it also
You
as a
should
trade,
always
because
check the
nobody,
previous post of the same stock,
yeah,
use
no,
a
no, no.
search
So
bar.
yeah, I understood what you're saying, Chavan. I'll just highlight that. So two things they're doing, you're right. One is that some people may see it as a trade, because what I do is when I think long term, I'm thinking of just 5 years, but I'm continuously giving the setup of each of these subdivisions, right? So I'm showing you when this is wave 1, and I'm showing you when this is wave 2, and then when this is 3 and 4. So in the short term, we keep writing about it as it is developing. Now people may take that as that each development as a trade, but my point here is that unless I've completed 1 and 2, so we actually I started writing about it when it was here in 2. Now if my entry point is here, let's say it is here or it is here, after this point I'm really not bothered till it completes 3, 4 and 5. What I'm trying to highlight that, so it's actually becomes a long-term investment. Now the problem would be if I bought it only over here. Okay.
Yeah,
So what I was
absolutely.
trying to say is that if I have bought it over there, and there are always, so now I'll go back to my index chart, which is what I'm trying to explain. Where is it? Okay. That there are stocks that I bought here, there are stocks I bought here, there are stocks that I bought here. Now, moment I get scared that, okay, 5 waves are complete, what if there's a deeper correction? The first thing I do is I look at the portfolio and I sort it on the basis of gains and losses. Okay. So I may have number 1, stock 1. Okay, 2 is stock 2. Okay, so you'll have a stock with 50%, first one with 100%. Okay, and then we'll go further down the list. You'll find stock 3, which will be at 20%, and then you suddenly have stock 4 and 5, which will be at 2%, and then stock 5. It may be minus 4%. Okay, now here's an example. And see, I cannot tell anybody what to do or not to do, because there are 100 people with 100 of their own management strategies. But I can tell you that what I do, or I actively do in terms of managing, is when I reach a point like this where a correction starts and I'm not sure what is going on, the first thing I do is I get rid of this. Okay, because this is the part which is risky to the portfolio, not this. This part has already proven me right. So if something has proven you right, okay, so there's a stock here, it's proven me right. Unless I say that no, long term something has ended, which means on a multi-year monthly time frame, 5 years are complete, now it can't grow, overvalued, or some other logic you have to get out, there's no reason to get out. It may pull back, then it may continue its longer. So if this falls, it really doesn't hurt this part. Okay, there'll be some drawdown, definitely, but as a long-term investor, it will eventually continue higher. So for that drawdown, I manage here. Now, if you really feel that risk, maybe you'll sell 5-10%. So you will do what you typically mutual funds do. So you will not sell too much of that. Okay. Where the serious risk management is needed is where something has not worked. Market is at the end of maybe a 5, and you are holding on to something which has not worked. Now, when something has not worked, that's the market telling you that you're wrong. So if you're wrong about something, the first step should be to exit, because it's easier to exit at -4 than at -20. And at -20, maybe you'll like it, because possibly it's at -4 because we ended up buying, thinking that it was at the end of wave 1. Okay, so I thought I bought a stock. Okay, it went up, and I thought it was wave 2, and I bought it. And now the market is doing wave 5 and falling, which means I may be wrong about wave 2 and wave 3 starting, and it is still in wave 2. Okay, so the reason for selling this 4% stock is maybe I get to re-enter it over here. And I also have to have the mental capability, if it doesn't fall so much, if it turns up here and the market changes course, I can re-enter over here also. So this is just near-term risk management. You'll have to have the mental fortitude to exit and re-enter, but the risk management has to be done with what is non-performing at this stage. Okay, and remember, everything we are saying here, I'm repeating, this is related to investing, because trading is very, very different. In trading, we usually, sometimes may do things slightly differently, though, holding on to winners is always the better idea, even in trading. People often try to book out the winner and to cover the loss of the loser. But the first thing you want to get rid of is the losers. So I think the same applies to both the trading and investment, is getting rid of losers, and you manage that risk whenever risk shows up. But there's an additional thing with trading is that you have to position size. Now here also, when we're getting rid of the bottom end, we are sort of position sizing, but in a slightly different way. So now let us think about trade. Okay. Now in trading, it's not always easy. There's something that can, especially bearish markets. You see, the bullish ones are easy because every time you buy a dip, even if you're wrong, you buy further on the next dip, it eventually recovers and pays you back. In bear markets, it's a little tougher. It sometimes doesn't pay you back that fast. It eats up time, which is what happened over here. Okay, so it eats time, and if you end up selling early, you can go wrong. At the same time, you'll have to keep adding and pulling back positions a little faster than you do in a bullish market. And that means that, see, over here, this phase, like here, once we started to feel it's falling, which is what happened. I think when you got that intermarket divergence with mid caps, is where we turned bearish. The sell-off occurred. I think at this point, even I highlighted that we'll bounce. So that's where I exited. Here, I started to think that, okay, it's bounced back one day. Should I add back here or should I wait? That's usually a tough decision, because the moment you can see A, B, and C on the hourly, you don't know whether it'll fall off right away. So I had to position size. From here to here, I had to position size. And also, my position size now on short side against my larger bullish view would be much smaller. So if on the long side, I would have gone up, say, up to 100 rupees long. Short side, I would probably do half or less than that to start with, so that you first build confidence that yes, this is playing out. Okay, and so it's a slower process. Once we get here, then we try. Then fortunately we got this sell off. Now again on Friday, I thought we'll bounce. So again, that was a point where I did a lot of booking out. The tough part has been on this bounce back. Should I add? So same problem I'm facing on this bounce that I did here. It bounced and then it stretched. If this is a bounce and now we are wondering whether it will stretch, and this time will the stretch be of smaller degree or will the stretch be of larger degree? If it's going to retrace the entire move, we'll end up at 14,900. With just a small stretch, then we'll only do 61% of this, maybe go up another 100 points, and then we'll come down. Okay, now I don't know that setup. So Monday, if it stays within, say, 61% of this, I'm still probably okay on the short trade. Okay, but beyond 61% of this last fall, I'm in trouble. So that's at around 14,665. That's also this swing high. So once we start going above that swing high, I think the previous short trade is already would be in trouble, and it could mean that it's going for a larger retracement. So from here all the way to here is a painful hold for a short, even if it's going to eventually fall. And And the reason is that sometimes you don't know what if it doesn't stop here and goes even higher. So in short trades, it's always good to get out quickly if something is not happening much faster and not try to hang on. There's always the opposite risk that if I get out too early and then tomorrow it crashes, I mean, you'll always feel that. And the way to deal with that is probably leave a 20% trade on the table. So if you feel that, no, what if I miss out, then reduce 80% and leave 20%. And then you have room to really add it back if it starts playing out in your favor. It's harder to add back when you don't have a position, because when prices start crashing very fast, like suddenly your opens gap down and it's selling off. If you have a position, you might find it easier to average in the direction of the trend. If you don't have a position, you'll find it very hard. Ab kya beche karke, same, you'll get that feeling here, now it's fallen too much, now I cannot short it. So taking that 20% position size in a bounce, if you feel it's just a bounce, and then waiting for a confirmation is sometimes useful. It can go both ways. Sometimes you have done 20% and it will continue against you, which gives you room to add at a different level if you get a further sign that it's playing out, maybe from some sentiment indicator or some other setup somewhere, world market, something will give you an indication. Or if it actually starts falling, where you get your early momentum indicators to cross over to the sell side. So yeah, I think that short-term trading, you really need to manage tightly with every swing and be prepared you will miss some swings. It has happened to me where I've been bearish and then keep looking for a bounce every time it looks oversold. There's sometimes where market just falls despite oversold. So I went back and looked. Yesterday I mentioned that put call ratio can also make a positive divergence despite this extreme reading. And when I did that, I was actually looking back at an example of the PCR here. You see this fall, what happened, not this one, wait, this one, is that after the market fell to this level, it actually looked very oversold. So, and it also looks wedgish. So you would have thought, and I also thought maybe it will bounce and then go down. But it just continued to slide. And what happened is post expiration, usually the put call ratio goes up because all the calls which are written, which is bringing the PCR down, expire. When they expire, the PCR itself shoots up, and then in the subsequent fall year, the PCR had a positive divergence because of that, move up and down in the data. But that did not cause prices to bounce. So this is where it gets really tricky, and that's why sometimes we just hang on to a trade till say sometimes the 40-hour average or so. So if I now plot this along with the averages and indicators, okay, so that will now throw light on what I'm saying. It's sort of becoming a class now, right? So we are now looking at the same period. When this wedgish formation occurred, we didn't really cross the green line, the 40-hour average, maybe here for 1 hour, but mostly remained below it. So the short trade didn't really turn into a bullish trade, and then it sold off from there itself. So that's the situation I was on Friday. So Friday, when I was saying that this looks only like a retracement at this point, we are still below the 40-hour green line here. Okay, we haven't retraced more. So can the PCI, and PCR has bounced after expiration, the data has turned up because all the call writing is gone. Can it fall again? So you couldn't have ruled it out on Friday at 3:30 that whether you'll get a larger bounce or not. Now, so you'll actually have to watch action on Monday. And so what I do here at these kinds of points is leave some position on the table. If it goes wrong, that part gets stopped out. So, and that risks only some of the gains that you made along this way. So the risk you are taking is only to the extent of not core capital, but something that you're willing to risk, and then you position size from there. Either you'll be exiting because it overshoots, okay, or else you'll just get a bump up. It will end up becoming ABC, and then it will go down again from there. So this is what I'll be watching out on Monday. Is it going to hold the Bollinger Band and the retracement on Tuesday or not? And whatever I'm saying is in complete ignorance of SGX, because that you don't know. You can't go by what SGX is doing on a Saturday. Okay, so
the first thing everyone does is watch XGX.
And you've seen it swing. You've seen before also. A Monday ko US is open. What happens on Monday night, you don't know.
Yeah.
So everything will change by Tuesday morning. 61%. Now I've just taken 61% of the last leg I mentioned earlier also, 14,655. So
Yeah.
that's going to be the more key level. Do you sustain above 14,655 or not on the Nifty? Probably determine whether it's becoming a larger bounce or whether it's going to go down from here itself. I think I'll use that level as my key for managing risk or position sizing.
Okay. Okay, so 14,665, which is the 61% retracement, that is the levels to watch out for on the upside. And if that holds, then C wave on the downside will continue. The message is loud and clear from Rohit. If you can just cover Indian hotels,
I
that
opened
would
that
be great.
right
Yeah.
now because so now what do you do with cases like this? I don't want to
Hmm.
sound like we don't want to really uh, give any particular advice here, but see, we got slightly oversold on in last week. But what goes wrong? See, if the market completes 5 waves and starts a deeper correction, then everything goes wrong. Because when the market does that, it is by itself telling you that something is wrong. Now, note here I've marked wave 1, 2, 3 times. Okay, I'll also show you where the count is going wrong and what are the problems.
Hmm.
One of the problems is that this third wave is shorter than this now. Okay, by a few points, but it is shorter. Okay, so earlier I thought I could mark it as a leading diagonal, but moment prices went up beyond this point, I cannot mark it as leading diagonal, which means I have to mark it as 3, 1, 2, 1, 2, 1, 2. Now the
Hmm.
problem with 3, 1, 2s is that now it cannot go below this point. This is my cutoff. In a leading diagonal, I could have had a deep retracement. It will still be a larger wave too. Okay, but in
Hmm.
a 1, 2, 1, 2 scenario, if this low breaks, then it violates the impulse, and
Yeah.
then you have to think whether the whole rise is corrective of some type and my whole count is wrong, and so it raises a lot of issues in the head, and that's where sometimes the market view is more important than what the stock is doing. So in the short term, stock, see, it broke this trend line. I've written about it, and I think moment it broke this trend line, I thought this trend line would hold as wave 2 support. It didn't. So for me, that's a point of risk management. If this breaks, then I have to reduce my positioning on the particular stock, and then wait
Hmm.
and see what it's really doing. There's always an opportunity. You can buy it at a lower price or re-entry, because this is one which is not yet gone extreme positive, right? It is not something that has played out in a big way. So if it has not played out in a big way, it's still in early stages of confirming what we are thinking as a turnaround. Now that might not mean that this is not the bottom. It just might mean that the wave structure is different. It may mean that 2 is not here, 2, this larger 2 is still ahead. This may be W, X, Y. We don't know the answer. Basically, what I'm trying to say. Sometimes when you don't know the answer, you just back off and wait. And in some other cases, like if I take, I haven't written about Goodrick in a while. So if I take this case, what is happening here is continuously we thought wave 2 is going on. Now wave 2 can do 50% retracement is done. Can it do 61%? Yes.
Absolutely.
So if I try to preempt, now see, what people want to know is, now is wave 2 over, now is wave 2. If I try to preempt wave 2 is over, I could end up being wrong. The alternate is when something is continuously doing something against you, you simply wait. You wait for it to complete, and then when it looks complete, when it turns around either on daily, weekly, or when the market has bottomed. So right now the problem we are facing is market is now turning over. Okay, and many of these stocks have turned over much earlier than the market, and they have been
Hmm.
correcting. So we just have to wait for the market sentiment, everything to you know go to the negative extreme and turn, and then you
Hmm.
feel more comfortable, saying that something is over. Which is why I'm not really covering anything. Now let's take the opposite scenario. Something like, say, you mentioned Copra earlier. I don't write about it often now because it's going into a wave 2 correction. I thought it's over here at Z. What if it goes on? What if it becomes a deeper retracement? I have no way of knowing. Sometimes all I can say is we are in wave 2, wave 3 will start later. Is wave 2 over here? Is wave 2 over here? Is it going to be over here? I mean, it could do 61% for all you know. But I don't know. It may not do 61%. It may just end up within 38%. and still move up. It has already reached the weekly Bollinger Band.
38% levels it has reached.
But then the question is, where did I buy? Okay, I mean, if I bought down here, okay, or here, then would I really even risk manage? The answer is no. Because if I'm thinking multi-year, because problem with risk managing is what you're booking this gain and you have to pay tax on it. Okay, so if you're into a trend, then you want to hang on to that trend, because even irrespective of the correction, at some point, if you think it's going to go higher, then you don't want to be getting out every in and then. I mean, then you wouldn't be an investor if you don't have a multi-year time horizon, or you cannot think in years or hold for years. But if you are just trying to build a position here only, you just entered here and you're trying to build a position, then you're at risk, okay, of going wrong, and that's when you need to risk manage till you get it right. So till the point where the third wave starts, and you've made your entry at the right time, and then added back into it, and then the news flow starts and the momentum starts, and then if you're riding the third wave, then you're cool with it. So risk management is all a question of when and where you entered and where you thought, and accordingly you have to manage it. I'm not going to particularly, we are not going to be telling particularly, you do something here or you do something there, because we are not acting advisorily. But when we do think something is complete, if I'm covering this, like for example, and I think wave 2 is complete, I'll write about it. Right now, we sort of backed off in writing anything, because it's not showing up in the momentum. Same here. This line broke. I think last time I wrote is maybe wave 2 completes at the lower line. It didn't. And now that it didn't, then I'm in the I don't know camp right now. Okay, so I can wait for it to happen. RSI can get oversold, but RSI is not the only indicator we use. So yeah, unless I get a setup, I think we're going to wait, is all I'm saying.
All right. So wonderful session. Thank you, Rohit, once again for covering. So on the Nifty, watch out for once again 14,665 levels. Probably next week will be a very eventful week. Even the rising COVID cases, the risk of lockdown. Do you think the market has already taken into the account, or?
So I think last week I was actually thinking risk of lockdown, and so many cases are rising, and will they really do it? One is they don't have an intent to do it, and what would make them do it? So I was just thinking this morning, and I realized that when California shut down, okay, the reason was not the number of cases, the reason was the number of hospital beds. Okay, so the reason is always structural. It is like, can we handle this or not? Okay, it's not about number of cases or number of deaths. It's about whether your system can handle it. So up to the point where you feel your system can handle it and you have enough beds for people who are falling sick to be taken in, and a lot of people are now doing home quarantine, so not everybody ends up in a hospital.
Yeah.
Okay, so it's only at that point will you actually get a more stricter lockdown like you got in California or like you got in Australia, where they didn't shut everything down. I mean, groceries and other shops were still kept open, but people were told to work from home and offices were kept closed for a while. So if you want a stricter lockdown beyond just a night curfew, which they've announced from the 28th, then it will only happen when cases go up to a point where the hospital system is being put to risk. And unless that happens, I think probably they are not going to do it.
Yeah. In fact, yesterday I was reading an article in the newspaper that in Nagpur city, makeshift hospital of 500 bed, they just opened and it got filled in a couple of hours. That was like very shocking for me. The number of cases, it's getting blown out. In fact, when I was only positive along with my entire family, it was very difficult to get a bed in Bangalore. Even in Bangalore, the rising cases, it's actually bothering. So to all the viewers, anyways, take care, stay safe, maintain the social distancing as we are maintaining here, I and Rohit. All right.
So social distancing with even the zigzagging of markets. So some position sizing distancing.
Position sizing distancing, wait for clarity.
Becomes clear.
Yeah,
That's
absolutely.
easier message.
Yeah, and wish you a happy Holi, Rohit. And
Yes,
to all the
happy.
viewers, happy Holi. Yeah, take care of your health. Stay safe. See you next week. Thank you so much.
Right. Thank you.